Let's talk now with Sue. Sue, you're with Allworth's Money Matters.
Hi, how are you doing?
Wow, we're doing great. How you doing, Sue?
I am doing good. Hey, listen, I wanted to have a spitball on what my situation is. I have $1.5 million in pre-tax assets. They were initially in a 457 plan and was rolled over to a traditional IRA when I retired in 2025. What do you think of me using the IRS life expectancy factor of 22.9%? To come up with a $65,000 split between Roth conversion and withdrawal of $32,500.
How much Roth conversion?
$32,500 every year. Because I didn't want to go ahead and convert $1.5 million right away because it would bump me up to,
Understand.
Do you have any Roth now?
Huh?
You have money in Roth IRAs now?
Yes, since 1998.
How much?
I think it's $400,000.
How old are you?
65 today.
Are you married?
No.
Kids?
No.
And if you did Roth conversions,
what's your income now? You retired. What's your income now?
It's $130,000.
Where's it come from?
From my pension of $94,000 and the remaining Social Security.
Oh, good.
And do you have any money outside of IRAs or Roth IRAs?
I have a brokerage account.
How much?
So I was thinking about, withdrawing the half of $32,500 and then pay the taxes and then put the money on the regular brokerage account.
How much do you have in the brokerage account?
Probably 1.5. $2 million.
Did you inherit any of this money, or did you make it all in your lifetime?
I inherited $500,000 from an ex-boyfriend.
Ah, good for you. That something came out of the relationship.
Yeah. But it's something I didn't expect, though.
I know. But was he an ex-boyfriend when he died, or did he become an ex-boyfriend?
He was an ex-boyfriend because he said that he knows that I love him. So he said that he felt comfortable giving me more than half of his assets. We were together since he passed away, 12 years.
Oh, very nice.
They keep me for a long time.
Okay, they keep you for a long time.
Yeah, they keep me for a long time because you know what? They said I'm so nice.
I believe that. Listen, Sue. Sue, if at this call we're going to post your contact information on our website, and those that are looking for a date.
Okay, all right, let's get back to this.
Okay, this is hilarious. Yes.
Let me ask you a question.
How's this?
Okay.
No.
Wait, are you going to ask how much income the brokerage account
No.
drives?
If you could take money in your brokerage account and put it into a Roth IRA, would you do that? If you could take $200,000,
because I don't qualify right now.
Let's pretend like
theoretically
a magical, like
okay.
If you could, would you?
The answer is yes.
In a sense that with the Roth conversion,
no.
I could go ahead and take out money from the.
All right, so let's go back to the question. How much money income does the brokerage account generate every year? Taxable.
To be honest, I don't know.
Okay.
But last year, I generated $455,000 from my overall account.
That's what everything grew by $455,000. That's not what you paid.
Yes.
Okay, good. You didn't pay it.
Yes.
Here, I like the idea of doing some Roth conversion from the $1.5 million IRA. I would not take a dollar of it and put it in the brokerage account. Anything you want to take out, I would convert it to a Roth. You have a very little amount in Roth relative to what you have in the brokerage account. And all that, every year you get a 1099 from your brokerage company.
Yeah, I do.
That you have to report, and you got to pay taxes on it.
I do.
The beauty of the Roth, you don't get that. You never will.
Yeah.
Yeah, so you want
to take money out, pay taxes, and stick it in your brokerage account.
Yeah.
And we're saying you were partially right. We're saying convert the maximum amount from the IRA to the Roth.
Maximum amount.
Who do you have named as a beneficiary on your IRAs? Please don't tell me an
sisters.
Okay, no ex-boyfriend, right? No.
Yeah. I requested them to go ahead and distribute to my other siblings. Because
Don't.
there's like 8 of
Oh,
them.
no.
List everyone you want. List them with the percentages.
Yes. Don't, because
There's limits.
And creating tax liability for them.
Yeah, because if they gift more than $19,000 to their sister, it's considered a taxable gift.
And
doesn't necessarily mean they have to pay the gift tax, but we all have a limit. We don't know what they're going to be in the future.
Yeah, and it's not only that, Scott, is that if it all goes to her, then she has to actually liquidate it probably at a higher marginal tax rate over a 10-year
on the IRA.
period.
Yeah.
Yes, on the IRA. So you want to, okay, so let's start at the very beginning. So, first of all, go find another ex-boyfriend that's going to leave you as a
He
beneficiary.
passed away.
Hey, we don't have to worry about any of the planning.
He passed away, but then I visit his grave every month.
Oh, you're sweet. Okay, so you're going to convert. We're going to convert money from your IRA to your Roth IRA. We don't know how much that is. It kind of depends on how much money is coming out of the brokerage account. So, we'd look at last year's tax return to determine what that amount would be, and then we'd run a pro forma. But it's gonna come from the IRA, and then the brokerage account. You're gonna take money out of that and pay taxes on that conversion. Okay. And you're gonna do this. You said you're 65. You're gonna do this for another 10 years.
10 years?
Yeah, you're gonna do it for another 10 years. Then you're gonna put a tax efficient strategy on the brokerage account immediately.
Okay. Right. Are you talking about QCD? I'm thinking about doing the QCD when I turn 70 and a half.
Well, yeah, but you're years away from that. But we're
talking about just making sure that brokerage account is managed for tax efficiency.
Yeah. Are you giving any money to charities now?
Yeah.
Do you writing a check, or are you giving appreciated stock?
I'm writing a check.
Okay, we're going to set up a donor advised fund from the brokerage account.
Okay.
You know, at the end of this is ripe with planning opportunities. This is, by the way, you are an incredible saver. I mean, you know what surprised me most about this phone call is that you brought your ex-boyfriend out to a really nice dinner every year. Because,
oh, yeah, I did.
I know. Well, what kind of surprised me is because my guess was you don't spend a lot of money.
Oh, I did. I did spend a lot of money.
On the dinners. Yeah,
on the dinners you did. But normally in life, you're a saver. You're a saver. You're a saver.
That's why I'm having a hard time right now with spending my money.
That's right.
Yes,
That's right. Yeah, you're a saver. You absolutely a great saver.
I have not spent a single amount of money from all my.
I know.
Well, right now, Sue, you've got millions set aside, right? $4 million plus set aside. Yes. You have a choice. You either spend it, you give it, or the government gets a big chunk of it.
Oh, no.
And you can give it while you're living. You can give it to your siblings. You can give it to charities, or you can spend it.
Okay.
Yeah, and your income's $130,000 a year, and you're not even spending that. Is my guess.
No.
You're saving that every month.
No. In fact, you know what? In retirement, I'm actually saving money.
I know that.
Okay.
I've worked with clients like you. I've actually been able to change their behavior. They now fly first class. They go on nice cruises. I'm just telling you.
To change their behavior. Yes, it takes time.
It takes time to change someone's behavior.
It's true, yeah.
No, look, the reason you have this much money is because you're very, very conservative with it. But this is it. You have done an incredible job. You have stored your labor, which is what you did over the years. You have stored your labor through all these savings. Here's what I want you to do. You do what we asked you to do and hire a financial advisor. And you're going to say, well, how much do they charge? And I'm going to say, who cares, right? They're going to charge market rate if they're a good advisor, but you're missing.
Well, they'll pay for themselves.
Oh, 100%. But you're missing opportunity after opportunity after opportunity. And you're asking.
What is the market rate right now of a financial
on this
planner?
size account? Less than 1%.
Less than 1%.
Okay.
Less than 1%.
Yeah.
Yeah.
Because there's been somebody who's been pursuing me. 1% to 2% of my assets.
2%? No. 2%.
That's too high.
Yeah, 2%. Yeah.
Holy moly.
Yeah.
Probably more like 0.75 or somewhere in there.
Yeah, probably 0.75%. Anyway, appreciate the call.
Yes. Thank you so much.
Thank you, Sue.
Bye-bye.
Good chatting with you.
How sweet was she?
Yeah.